Good afternoon, everyone. Welcome back again to our discussions in accounting. So, this day we are going to react to government or governmental accounting. So, basically, this is something that has to do with all things about government accounting. So, our discussions would focus into that and would begin with theoretical background of government accounting systems before we go into the journalizing aspects and the accounting processes that we are going to go along the way. So this is a topic that is under advanced financial accounting and reporting. So expect that this would be peculiar to the organization, and that is the government accounting system. All right. So for our discussions for the day, it will be based on the book of Guerrero and Peralta, that is Advanced Accounting Procedures and Applications, Volume 2. This is Chapter 21, the Government Accounting System or GAS for National Government Agencies. Now, what is the reason that there would be government accounting system that is peculiar or unique to the government agencies? Basically, it is because although the first paragraph here talks about that the current accounting research focuses for profit-oriented enterprises or businesses. However, there's also an equal need for us to look into what are the needs, the analysis, and the procedural refinements for the government agencies. So if we talk about government accounting, we talk about the accounting systems, the policies, procedures applicable to the government departments, whatever agencies they may be, could be bureau, customs, could be departments, as what I've said, could be also government owned and controlled corporations, and then also the political subdivisions like the provinces, the cities, and the municipalities, because that's the endpoint. Barangays and CTOs would not make use of the National Government Accounting System or NGAS, which is discussed in the second paragraph. So in terms of who promulgates the particular accounting systems, that is actually the task of the Commission on Audit in its circular number 2001 to 004 that discusses the new government accounting system. So there were changes way back in 2001, based, of course, also on the developments in IFRSs or PFRSs, the Philippine Financial Reporting Standards, which are to be used for the profit-oriented enterprises. All right, so for the definition, for the first part, I'm just going to focus on the theoretical portion or background. So for this part here, since I talked about introduction plus the nature definition, so this will go on with the theories. And then another part or addition for this one will be for some items like the accounting parts now, journalizing, etc. And then finally would be the other provisions. All right, so there will be three parts of government accounting discussions. To continue, government accounting as defined, so we talk about the phases of accounting. So recording, classifying, summarizing, interpreting, and communicating. So some would say four, some would say five. So these are the phases in accounting wherein all transactions involving the receipts, so the process, the collections, and dispositions, so the minuses of government funds and property. And basically, these are interpreted later on. So the things are discussed basically are still about government accounting and the accounting processes. So as a process, yes, that is concerned with the maintenance of records that show the propriety of transactions and account for assets and other resources available for use. So for the first one, this talks about records, the books of accounts that are kept so that we will know like how the assets and other resources are being made use of properly. That's why we have propriety. And then we have to prepare reports because the stakeholders would be asking for them so that they will know how these resources are properly accounted for by those in charge with the governance. Okay, that's one. The second one is the classification of items to provide useful information necessary for control and efficient management operations. So this has to do again with effectiveness and efficiency of operations. And finally, the reports are to be prepared. So we will know later on that the set of financial statements which we have known in IAS 1 would be closely related also to government accounting. All right. In government accounting, fund is being set up. This is basically the accounting consideration or unit for governmental entity. Fund basically is the sum of money or other resources which are set aside for certain purposes, which are in accordance with special regulations, restrictions, or limitations. Now, in order for us to be able to identify the classification of the fund, we should know which purposes they are in. If they're available for all purposes, or basically, like generally speaking, any purpose, that is general fund. On the other hand, if there is a specific consideration or specific purpose, there is legal restriction to that, such as the proceeds of specific revenue from taxes are legally restricted to expenditures for specified purposes. So in that case or situation, that simply means that that is a special fund. All right, so that's for the two classifications. I repeat, fund is basically any asset or resource which is set aside for any purpose. And then likewise, this statement here is very important. A fund constitutes an independent fiscal and accounting entity with a self-balancing set of accounts recording cash and other financial resources, together with all related liabilities and equities and changes therein. So basically, these are the items that we see on the balance sheet or statement of financial position. So all the assets, right? Because these basically constitute the fund, cash, that's cash and cash equivalents. The others would be on the other financial resources. That's on the left side. The right side, left is debit, right side is credit. These are the related liabilities and equities and whatever changes in equity. The equity though here is government equity. So basically that's owned or maintained by the government. Okay, so that's for the fund accounting. Next, this one is something perhaps that would excite us because we talk about budgetary procedures. So basically in government accounting, the finances would begin from budget or would involve a budget. In a budget, we see the items that are needed for certain period and for certain purpose. So the budget would show, for example, all income or revenue, and then all the expenses therein. So budget basically would be based on estimates because it is a plan. Now, in most of the government accounting agencies, instrumentalities, subdivisions, political subdivisions or entities or branches or departments, etc., normally they are going to make budgets of expenditures or estimated expenses. So take note that we hopefully know that expenditures and expenses are two different things. Expenditures basically means disbursement or payment of cash, of course, while expense is the gross outflow of economic resources. So decrease of economic benefits. And then in that situation also, we would be seeing like more on the expenses. We only have few agencies that would have revenues. One of that is of course those in charge with collection of taxes. For internal revenue taxes, taxes within the government coffers of businesses internally in the Philippines. So we think of the Bureau of Internal Revenue. But if you think about the sale transactions going outside of the Philippines, so exports, then including also imports or going inside the Philippines. So this means that the relations between Philippines and other countries, so we now talk about Bureau of Customs. So these agencies normally are having revenues, including also the government-owned and controlled corporations, like our PhilHealth Insurance Corporation. We also have Pag-ibig. We also have SSS and GSIS. So these are government-owned and controlled corporations in which they have revenue. So they may also do the estimates of their revenues. Now, what's the point here? Since we are saying that the budget preparation would differ on an agency, department, bureau, commission, etc. But the procedures are the same. So we think of 4 phases. So to make a budget, for example, for the year 2020, it should at least be finished a year prior. So meaning on or before January 1, 2019, the budget should have been made. Otherwise, there wouldn't be much time now to be able to deliberate the budgets. So we need at least like 1 year. That's the theory. We don't know like what could happen in real life. All right. So this begins with budget preparation and presentation. In preparation and presentation, the different government agencies from the lower level, like if this has to do with depth ed, so like the schools, individual schools would make their budgets, theoretically speaking, but we don't know really again as to how these are determined. It could be that the division automatically would make budgets for each school, but supposedly it starts from the lowest level, then consolidate going up. So let's say from different schools within the municipality or district, combined municipality, going to the district or area, going to the province, going to the region, and going to the national level. At the national level, the budgets now are to be consolidated for review of DBM, Department of Budget and Management. However, before giving or submitting to DBM, that has also been reviewed by the respective government agencies. So reviewed from the lowest to the national level. Then after that, DBM also will consolidate everything to make the government-wide budget estimate. And this becomes the national budget. Now the DBM may also change or may also, for example, alter some amounts or accounts depending on the national priorities. So we all know that every executive branch of a certain batch or let's say term of the president has priorities. So they may also cancel or add or consider any other priorities to the point that other expenses are to be eliminated. Okay. After that, the DBM would then submit the budget to the president for final approval. So that's the point. The president then, upon approval, so take note this is final approval, meaning this is possible that the president can return, oh, you revise, DBM, revise. This is not our priority. So meaning the president together with the executive heads probably and the DBM would be deliberating the budgets before submitting to the legislative branch of the government. So number one is executive, second is legislative. I think judiciary would not form part here at this point in time. So only the executive and legislative. The legislative body, on the other hand, we all know that such is in charge of creating laws, while the executive, of course, executing laws or implementing laws. That's why the budget comes out from an appropriation bill, which is a law in itself. So nothing comes out from the treasury of the government of the Republic of the Philippines without an appropriation bill. So that's basically coming from the Constitution of the Republic of the Philippines. So what is our basis as to the budget? Our answer would be the Constitution of the Republic of the Philippines. And then the budget will be submitted to the legislative body for review, deliberation, and formulation of an appropriation bill. This is the law that I was talking about. And then after that, it will be forwarded to the president. The president will sign and approve that bill. And then the bill, of course, will be forwarded to the DBM. So in this case, this is now on the budget execution and operation. However, there is a question. For example, is it possible that the president will not approve the bill that was forwarded to him or her by the legislative branch of the government? Yes, that is a possibility. That is a question that can be asked. However, basic rule though in the law is that in case the president objects, so exercises the veto power to counter any portion of law or the law itself, it will only have impact on that part of the law that the president vetoes or disagrees. So meaning the entire law cannot be canceled. What's the reason? Because it has undergone already the steps and processes, and it's going to be waste of time, energy, effort to cancel it because we have to go back to the beginning. So that's why there is that caveat or cash or ruling. And then the president only has 30 days to approve that and forward or make his or her decision with a signature to the DBM. Otherwise, we will assume that the president agrees if ever he or she does not communicate the approval. All right, so that's the theory though. And then what if really the president vetoes? If the president vetoes, as what I've said, it would have impact on that part or portion only that he or she disagrees. However, that can be countered by at least 2/3 of the legislative branch composed of the Senate and representatives, so the upper house and the lower house. All right, so meaning it's not that easy though for the president to just cancel any law just because he or she is not comfortable personally speaking of. All right, so that is under political science or political law. Number 3, budget execution and operation. So this is now the part in which the budget is ready. There's already a law, so it is ready for use of the different agencies, but that will be, of course, subject to certain amounts based on the budget, certain allocations, which we will know of as we go along the way, coming from the DBM, Department of Budget and Management. So the DBM is in charge really of the proper management and allocation of the budget. Okay, number 4, budget accountability. So for budget accountability, we talk about the budgets which are being utilized in effective and efficient and practical manner. And so then in budget accountability, we will also know if our expenditures and then our respective actual performances and spendings really are favorable or unfavorable to us. So we all know this in cost accounting, we call this as variance. The variance is unfavorable if ever our actual costs or expenses would exceed our budgets, right? However, the basic ruling is that we cannot go beyond our budget. But then just in case though, because sometimes we thought the money is still there, but it's not. So that would be a question now of proper management of the agency or organization of the government. Who is in charge with this one? It is the COA or Commission on Audit that is in charge for this one. Okay, so COA though will issue the report which will be years later so that sometimes their findings or fines and the audit would be not much of, I would say, giving immediate feedback. So that's the problem sometimes. Anyhow, these are now the four phases. You could say that in budgetary procedures. The acronym that we can make here is PAEA. So PAEA. So that's a suggestion just to be able to arrange them properly. Next, the no government accounting system. That's the NGAS. But with the usage of the electronic software and accounting software, that's why we would be saying ENGAS. All right. The chart of accounts is already ready for the government accounting systems. Unlike for the profit-oriented enterprises we're in, if we just start the business, we really have to start from scratch. But if we use accounting software, sometimes there would be some suggestions as to the possible account titles, like if we use QuickBooks or SAP, for example. But for some accounting softwares, really we have to start from scratch. All right. Then it is to be used. It is prepared for use by all sectors of the national government. Okay. So in terms of the accounts, though, we all know this from counting one, perhaps, that we started, that it will be for balance sheet assets, liabilities, and equity, then current and current has to be shown. For the equity, there will be the government equity account and the intermediate accounts, which are the income and expenses that are to be close to equity. All right. And we cannot see here withdrawal or drawing or dividends because we don't invest in government agencies or no owner or owners. The government is an entity in itself. It has its equity. Next, income and expense accounts can be classified also. So here are the classifications. We make this simple. For income or revenue, just like the fund, it can be general or specific. The fund there, though, is special fund. It's not specific fund, it's special fund, but some books will be using specific fund. Anyhow, so it's the same, general income and specific income. General, if it is an income available for all purposes, and these are the all types of income or revenue that are normally earned by the government agencies in the exercise of their functions. For specific income, these are now the taxes imposed on taxable income, properties, and use or sale of goods or services, including fines and penalties. So basically taxes and fines and penalties. Okay. In number one, though, we can see here that the example is income from public enterprise or investment. So if the government has investment in other entities, it's possible, though, that the government will make use of its assets to do investment. That's true. And income from grants and donations. So if certain entities would donate resources to the government, so this would be under general income. Okay, that's income or revenue accounts. Next, expenses accounts. For expenses, we can classify these into three. Now, I will make it easy to remember. If you say personal services, PS, we talk about all compensation, remuneration, benefits of government employees. So salary, the bonuses, the incentives, etc. Financial expenses, on the other hand, from the word finance, which are related to the classification also of expenses in our Philippine Financial Reporting Standards. So finance costs. We talk about here borrowing. So we get money from debt and borrowings. That's why we talk about interest expense. We talk about bank charges. We talk about commitment fees and other financial charges. So basically, these are the items common to the financial expenses, and includes also to forex transactions. Yeah, that's true, because if we deal with monies which are not Philippine pesos, so basically we deal with money still. So that is under finance, sources of money. And that's why for number two, the MOOE, maintenance and other operating expenses, all other expenses which are not in number one and three would be part of number two. All right. So that's maintenance and other operating expenses. Okay, the new chart of accounts is presented in the appendix. So we will just be scanning that. We don't need to memorize because we can't load. There are so many account titles, but we have to know that there's the coding system. In the coding, we assign numbers so that we will be able to know the different accounts as different from each other. So there is proper classification. Then why is it there? So that we will be uniform. Then it would be easy to consolidate the data. Yeah. Since if we have the control code, for example, let's say assets will be 100 to 299. So all assets will be consolidated within these codes. And adaptability to computerization. Yeah. So this is how it works for the computers. We need codes to do that. There are 3-digit codes, by the way. So do we have to memorize it? No. However, it is possible that questions could be asked like, let's say the account is salaries expense. What would be the code for that? So that is 700 to 749. How do we make this easy to remember? Simple. You have assets here, right? So we know assets contra. So that's 100 to 299. Why is that? Because this includes current and non-current. Okay? And then if you can notice though, guys, there's an interval of like almost 100 or like 99. So here, example, assets 100. So plus 99 could be 199 or 200. Plus 99, 299. So those are composed of current assets and non-current assets. The contra ones would be interval of 99. Then liabilities, yeah. If you're going to think of it, current assets 100 to 199. Non-current assets 200 to 299, right? Contra 300 to 399, liabilities 400 to 499, and so on. That's how the coding works. Then equity is here also. We just can notice that the ruling somehow shifted in revenue and gain. So in revenue, it's from 550 to gain or loss 699, and expenses is 700. All right, so you can remember them, or we can remember them, the coding. Okay, after that would be what are the features, objectives, and policies of the new government accounting system? Then the NGAS, of course, will adopt commercial accounting. We follow how the accounting processes and procedures are done for profit-oriented enterprises and businesses. Also, there would be the case of double entry bookkeeping system, wherein we think of the debits and credits, and responsibility accounting, we think of whether that particular entity or branch is a cost center, a profit center, right? I'm not sure if there's an investment center. It could be for, let's say, a government-owned and controlled corporation. So that responsibility accounting, the responsibility centers are discussed in management accounting subjects. Okay, next is basic objectives. So we want simplified government accounting. We want conformance to IASS. We want to be internationally acceptable also. And we want that our reports are periodic and relevant. Why? So that we can better monitor the performance. So in other words, bottom line to this is that we want that our operations of the business, if this is commercial accounting, but this is not the government, then would be made better or would be done better. And so that we would be able to analyze in behalf of the government much, much more. So that's needed for government accounting. The stakeholders would be the government management, and then also the other stakeholders could be internal or external of the government. All right, after that would be the features and policies. Accrual accounting, we all know this. Normally, we do accrual accounting. However, overall, the basis of accounting for a government agency, if we are going to ask ourselves, would be the modified accrual, which simply means that we have the accrual, so all income are recognized when earned, regardless of when collected, and expenses would be recognized when incurred, regardless of when paid. But if income would be impracticable to use accrual basis, then we use the cash basis. So example of that would be the revenues of taxation. So taxation laws are different from the Philippine Financial Reporting Standards. PFRSs are not laws, they're accounting standards. So normally these two, the law and the standard, would be in conflict with each other. And for taxation, we follow the tax law. So the tax law is not following really accrual basis of accounting. And that's why overall, we use the modified accrual basis. Next, one fund. There's only one fund that should be maintained. Separate fund accounting shall be done only when there is a requirement by law or a donor agency or as necessitated by the commission and audit. Next, accounting books. We can say RA and NG. RA, regular agency, would mean these are the books of accounts used by the government for their normal operations, the journals and ledgers. The government would also be using their NG books, the national government books. So we can compare cash journal composed of receipts, disbursements, but like one combined cash journal, it's here. General journal and general ledger, it's here. So if we will be asked, the difference is just that for the NG books, there's only cash journal and general journal, and then general ledger. So no subsidiary ledgers for the NG books, and no also specific cash journals. So we can also say that the regular agency is like a profit-oriented enterprise because of the journals and ledgers kept. In fact, the subsidiary ledger is really expensive. In our accounting one discussion is just like few. We just have, for example, the subsidiary ledgers, which are there would be the four. The, let's say, accounts receivable, we have accounts payable, could be advances to employees, and could be also notes payable or notes receivable, could be five though. But here it's really extensive, like there are inventories, fixed assets, CIP, and liability. CIP, by the way, is any PPE, property, plant, and equipment item that is still not finished. So that's why it is in progress. All right. Now, only the general journal shall be used for RA and NG books with the implementation of the computerized agency accounting system. Anyway, once we place the entries on the general journal, we can like extract the reports which are already forwarded to the specific ledgers or journals, special journals. Here, these are the special like journals. But then I understand that for merchandising, there's sales journal, there's purchases journal, but it's like different here. Checks, disbursements, though it's here or there. Okay, accounting reports, we all know this. We can prepare also in interim, so monthly, quarterly. The trial balance could be pre-closing and post-closing, so it's extensive in a way, but it's like clickable. Just input all entries, then we can just extract and generate the reports, and also the other financial statements. Next would be for the trial balance, there would be two money columns, the debit and the credit. After that, our allotment and obligation. So here, what's the difference? If you say allotment, that is the specific amount that is allocated by the Department of Budget and Management specific to the agency. Obligation, on the other hand, is the liability or the liability that a certain agency should incur on a certain period. All right. If ever we have some entries on the allotments and obligations registries, there wouldn't be any journal entry. So all we have to do is to place the amounts or the details. This is like subsidiary ledger, if you can visualize. That will be placed on the specific registries. And so the registries then would be classified into four. So this is like, again, subsidiary ledger, or they are like subsidiary ledgers. And then could be memorandum entry could be placed. Like memorandum entry would be phrase form, paragraph form of stating the transaction of a certain government. So take note of these four. If you can notice, the latter three are basically based on the amount and the classification of expenses, while the first one is on capital outlay, in which we talk, yeah, it's investment. We talk of PPE or any other non-current asset. So they are useful assets, useful for more than 1 year. They may be depreciable or non-depreciable. All right, financial expenses. So it's not here, but there's also RAOFE, supposedly. RAOFE, registry. Yeah, okay, it's here. So it's different from the MOOE. Next, if there's notice of cash allocation, so this is now the amount allocated by the NCA, it's called NCA, and then that is based on the allotment allocated by the agency, or allotted, we would say, so that we will not be confused of the term. So allotment, allotted, NCA is allocated. So in other words, out of the budget, the DBM now would be releasing some first allocation of the budget, still the budget, that is the allotment. So the allotted amount, the set aside amount, or earmarked amount. But not all amounts will be released by the DBM. Of course, we all know that we cannot just give everything in one time or of one time. And so when the DBM would be releasing only a portion of the allotment, then we call that the NCA. To journalize, we are going to debit cash national treasury. MDS could be abbreviated, but normally, guys, we all know in accounting one that is a mortal sin to abbreviate account titles. And so we really have to spell out. We cannot use sing, but then teachers would really allow cash national treasury, even MDS. But hopefully we can know that MDS stands for Modified Disbursement System. All right, next, perpetual inventory. In terms of costing the inventories or the valuation, we are going to make use of moving average method. So if you can recall, let's proceed to J. You can recall in accounting 3A, that is financial accounting and reporting part 1. So all costs of the goods will be included to be added if that's purchased, deducted if sold. Whatever is the last value would be the moving average. That's letter J. Now, for recording of transactions in which the purchases would not be recorded as purchases, instead we are going to make use of the inventory account. That's perpetual inventory system. I repeat, costing or valuation moving average, recording is perpetual inventory system of supplies and materials. Now, petty cash fund should make use of impressed system or impressed fund system. Okay, after that is construction of assets. So we consider liability, we consider the asset based on the percentage of completion. So you have the construction period theory. All right, so if there would be bonuses because of early completion should be added to the cost. If there would be liquidated damages charged and paid for by the contractor. The contractor is the construction company in charge of constructing the asset in behalf of the government agency. So if the contractor would be paying liquidated damages because of, let's say, unnecessary delays, because of, let's say, imperfections, or let's say missteps or mishaps on the respective constructed asset or project, which would be material, then in that case, such should be deducted because it's like a refund on the part of the government agency. Okay, all other expenses related to the construction should be capitalized. This is in close relation to our discussions of long-term construction contracts. Next, depreciation. We use straight line method. It's really clear cut, although we have so many methods, but it's straightforward here. Use straight line method, but normally we use 10% salvage value. It's not stated here, but it should be 10% in accordance to our new government accounting system. And then if there is any leasehold improvement, for example, the agency rented a space and there was a construction that would tantamount to PPE that is constructed. So that would be depreciated over the remaining period of the lease, meaning the contract, remaining term, or the life of the improvement, whichever is shorter. So in this case, the leasehold improvement really is separate from the asset. This is a major improvement. Next, allowance for doubtful accounts. We know this one for the portion of the receivables that we think would be uncollectible. Then contingent assets are eliminated because they may result to certain income that will never be realized. That's why they're just disclosed in the notes to financial statements. The assets, by the way, contingent here, if probable. If reasonably possible and remote, these are the 3 degrees, then they are just the latter two. So reasonably possible and remote, then the contingent assets are ignored. On the other hand, if liability, we all know this, that if probable, it will tantamount to a provision. So there's a debit and credit, normally debit a loss, credit a liability. If reasonably possible, we disclose in the notes, but if remote, ignore. Then liability, we follow again commercial accounting that there is liability when the goods are delivered to us as government agencies and supplier or creditor bills. Now, there is a question though, why is it that there are registries? So the concept here is that out of the allotments, meaning the budget portion allocated to the agency, a portion of that, of course, would be paid for the obligations because in government accounting, we think of bidders, wherein the suppliers would be there, like identified for all items in the government. That's how it goes for the government. And then we just have to place them in the registry or the schedules. They are not to be journalized. So that's why the obligation accounting here in this case is just on like noting the amount. But in terms of journalizing, follow here that only when goods and services are accepted or rendered that we are going to recognize liability. Okay. Next, accrued interest. In this case, if it is a receivable, so that's going to be an income to us, accrued interest income. But if it is like related to a loan payable or a note payable, then that's going to be a liability, accrued interest expense. All right, borrowings and loans, liabilities accounts, registries for our public infrastructures or investments. So you have bridges, road, parks, and reforestation. This can be more depending on the projects there. These are just examples found on the chart of accounts and could be the registries. Because in the chart of accounts, you have there the non-current assets that are specific for construction, could be bridge, road, and there are also the registries applicable for them. So there can be more registries depending on the projects there involved. Then this one, this is interesting, and this is really like, we would say, very unique that should be known of a government accounting system because it is not known by a lot of people. Like, I'm really shocked that there were negative entries before in the government accounting. Example, if we want to effect a minus to a certain account, we do not put it on the opposite side. Supposedly in our learnings, even from basic accounting, to effect For example, a decrease of asset, we put that on the credit side. A decrease of liability, we put that on the debit side, meaning we put it on the opposite side. But before, here, this is allowed, like shocking, that we can just put negative amount. So meaning same side, but the amount is negative. Isn't that a shocker? Anyway, now in our current versions, even in our days, it's no. So place it in the opposite side or the minus. And then corollary entries would be like additional. I think this is something to do with the additional. For example, this particular part here, acquisition of inventory and other assets shall be recognized as capital expenditures in the regular books of accounts. So debit the asset, not need for any corollary entry. Okay, so meaning no need for like another account title for that. It should be charged to that specific account title. Okay, so after this one, this would be on the accounting aspects. So the accounting procedures would be for part 2. That's it for part 1 of government accounting systems. Then please stay tuned for the next parts 2 and 3. Bye for now.